Maynard's place.
The Maynard's place? Yeah, I'm thinking of buying it as a holiday let.
As a holiday let or a buy-to-let? There are two different types, see? Very different as far as the bank's concerned, especially if you're going to get a mortgage. Back in the good old days, when the banks used to lend money to anybody, you could get 85% on a buy-to-let. You could get 75% on a holiday let. Holiday let's still the same, buy-to-let's a bit different now. Banks ain't got no money, see? You're repairing their balance sheets. What that means to you is that you can only borrow about 75% on a buy-to-let. However, the more money you put in, the better rate you get. So for example, if you put in 40%, that's 40% of the purchase price, you'll get a much better fixable tracker rate than if you put in less money. Holiday lets, they'll look at your income, make sure you can afford that one, and your main mortgage, if you've got one of course. A lot of people want to come on holiday in this country because they think it's cheaper. So a holiday let's actually quite a good thing. However, you get more money in the summer, in most places, than you do in the winter. So when you're doing your annual calculations about whether you think it's a good investment or not, you've got to make sure that the rent through the summer period and a little bit of the other periods will cover your mortgage if you're going to have one on it. Insurance. It's different on buy-to-let and holiday lets. You've got to make sure you've got a decent insurance company what knows what you're going to be doing with the property. That way, if one of your tenants, if it's a buy-to-let, sets fire to the place, you're covered. Or if some holiday makers steal all your stuff, you're covered on that as well. Right, if you've got more than one buy-to-let, some lenders are okay with that, others aren't so much. If you've got a lot of property on a buy-to-let basis, you've got a portfolio. There are lots of banks out there that still lend on portfolios. However, they're fairly restrictive about how much they'll lend on them. Mostly 60 to 75% is the max you'll probably get. Saying that, there's a lot of lenders out there now that do like the portfolios because the people who've got them, they think are sensible property folk, unlike maybe some of the folks in the banks. If you've got a portfolio, you need to get yourself a good broker, because a broker will know what to do with a portfolio. Of course, you've got holiday let or a buy-to-let. When you come to buy them, you're going to need to get the place surveyed. Well, in most cases, the lender will do the survey. You've got to pay for it, mind, but they'll do the survey. Some banks give you free surveys. Once they've had it done, they like it, they give you the mortgage, they'll refund the survey fee. Some banks won't, of course. Now, with both of those, just because somebody else is giving you money towards the keep of the house, rent, you still got to make sure you pay that mortgage, because if you don't, it'll affect your credit rating, and that'll affect your ability to get any sort of mortgage or any sort of finance. So you always got to make sure that it doesn't matter whether the place is empty or not, you make the payments on that mortgage. It's bad if you don't.
Okay, thank you.
Rates, though, do change all the time. So if you think about buying the Maynard's place soon, you better check the rates now. But if you think about doing it in a couple of months, the rates will almost certainly be different. Hopefully, as the year goes on, the economic situation will pick up a bit, and so we'll get more and more competition in the market, which means the rates will get a bit more competitive, and the lenders will get more competitive, and they'll be after your business.
Okay.
I expect you're thinking about Bank of England base rate. It's at an all-time low. It's been at an all-time low for an awful lot of months. In fact, more months than I can remember. However, it's soon going to go up, and in fact, they're talking about it putting it up this year. Which means that if you're on a tracker rate, which basically goes on something above the base, it'll go up. So if you're worried at all, especially with investment property, you should be thinking about maybe having a look at fixed rates, because whatever happens to base, the rate will stay the same for a given period, say 2 years. I'd probably go for a fixed rate now. But that's only me. I'm a little bit conservative when it comes to these sort of things. Well, there we go, that's my opinion. Not that I know anything about the financial markets. I best be off. I got stuff to do with my sheep and my pigs. Bye.
Okay, thank you. Thanks very much. I'll bear that in mind. Bye. Bye.